morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 5th of July. RBA keeps benchmark interest rate unchanged. The RBA remained on hold today and did not clearly hint any upcoming policy action, despite the market uncertainty following the Brexit vote. Officials noted that financial markets have been volatile following the referendum, but they have continued to function effectively. Even though the bank did not signal imminent easing, it did change the language of the meeting statement to indicate that new information will allow the board to determine whether more action is appropriate. Aussie dollar spiked on the decision, but quickly found some sell orders and erased those gains. Moving forward, we expect the Aussie's forthcoming direction to remain linked to global risk sentiment, given that it is considered a pro-risk currency that performs well when risk appetite remains elevated, and vice versa. With regards to further easing, bearing in mind the bank's change in language, we believe that the biggest determinant of near-term action may be the Q2 CPI print due to be released on the 27th of July. As for today, during the European Day, the Bank of England will release its biannual financial stability report. This report will indicate the biggest risks to financial stability following the Brexit vote and will outline the macroprudential instruments that are to be used if necessary. Bank of England Governor Carney will hold a press conference following the release, and market chatter suggests that the bank is likely to announce looser capital requirements for banks. Following Carney's statement last week that the Bank of England is likely to cut rates over the summer, we expect the bank to take any required action to ensure that loans continue flowing to households and businesses, something that makes a reduction in capital requirements appear likely indeed. The fact that aggressive Bank of England rate cuts and/or expansion of QE could result in inflation skyrocketing may be yet another reason for bank officials to choose macroprudential tools in order to boost lending. From Eurozone, we get the final service sector PMIs from several individual countries and the bloc as a whole. Given that these are expected to confirm their preliminary estimates, any reaction in the euro may remain muted. Eurozone's retail sales for May are also coming out. In the UK, the service sector PMI for June is expected to have declined, but any pre-referendum data are likely to pass unnoticed unless we have significant surprises. From the US, we get factory orders for May, and expectations are for a fall, something supported by a similar decline in durable goods orders for the month. Besides Bank of England Governor Carney, we have three more speakers on today's agenda. ECB Executive Board members Yves Mersch and Sabine Lautenschlager, as well as New York Fed President William Dudley. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.